Yeah, I
Yeah,
will.
I know the other commercials we really didn't play,
Right. All right, 2 minutes.
All right, brother. What up, Jay James? What's happening? Good morning, Mark, Brett, Susan, Barbara, Kim, Mark. On fire today. Weather's beautiful outside.
Broadcasting to the Gumbo Nation for 6+ years.
Everybody come on, let's get down.
Providing education and options to listeners throughout the Gulf Coast and the nation. Mortgage Gumbo is brought to you live weekly by the Total Home Authority, Team Title, Tito's Homemade Vodka, TWFG Bidenkoff Insurance Group, The Fence King, 360 Home Inspection Services, and Bienvenue Plumbing. Mortgage Gumbo is the leading authority for all things home-related. So, let's spice up that bowl of mortgage awareness with the man who is high in mortgage knowledge, yet heightened hair challenged. The man who only knows how to put the client first. The true definition of a face for radio. The leader of the Gumbo Nation, Dwayne Stein.
What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. And if you want to join the show, hey, give us a call, 504-260-0995, or shoot us an email to info@mortgagegumbo.com. Hey, I hope y'all like that new show intro. So, hey, a little something we're working on there, so give us your feedback on that. Kind of cool. But if today is your lucky day, okay, maybe because some of you already know what the lottery number is or whatever, but today's your lucky day. The weather's beautiful. Hopefully it is in your part of the country as well. But raise your hand and keep one hand on the wheel for those who are driving. But how many of you know someone that is over the age of 62? How many? Come on, don't be shy. Nope, come on. If you're 61 and a half, that's not 62, but you don't want to miss today's show either, because we have joining us from the mothership, the vice president of Heckham Lending, Home Equity Conversion Mortgage. Y'all know what that is. That has to deal with reverse mortgages. Susan Pomfret is joining us. And not only is she joining us, but Susan, and people don't like to brag on themselves, but this woman's amazing. She was one of the pioneers of this program, and we're lucky enough to have her as part of the team over here with Mortgage Gumbo. So super excited about that. She's going to be joining us in the next segment. So what I would tell you to do is take your time right now. Go get your pens, your pencils, maybe your recording devices, and be ready. And if you have questions, call us 504-260-0995 or shoot us an email to info@mortgagegumbo.com so we can ask Susan, because there's not a better industry expert than this lady that will be joining us today, and we have the benefit of having her being part of the Gumbo Nation, which is fantastic. We'll be getting pictures up. We thanked y'all last week, Gumbo Nation. We got some pictures in. So we'll be putting that. Hey, go join the Gumbo Nation group over there. If you want to see events, different things like that coming up, we've got our pictures from last week over in Lake Charles. Couple other things I want to make sure that I mention. And I don't want to take it for granted because so many of you, dozens of you actually, every single day are visiting this website. And we've now made it even easier. And that's snapsendandsave.com. Snapsendandsave.com. So not only now can you go there to find out, hey, should I refinance? Is refinancing worth it for me? I'm a first-time home buyer, or I'm thinking about buying a home. How much home can I afford? What is my buying power? Right? Now we have on there for reverse mortgages. We've got that uploaded. So, hey, maybe those folks that are 62 or older, hey, maybe the grandkids have got to help you get on the site, but it's a couple really easy questions. And then most recently added within the last week is our one-time close construction. And this program right now is absolutely on fire because I know what all of you want. I listen to y'all. For 6 years, this has been your home show. This has been the place you've come for education and options for 6+ years. And I've been listening. And I know what your needs are. I know you're hey, the inventory. You're not happy about this. Maybe you own that little piece of land that you're not sure, what can I do with this? Well, now we've got the programs for you, the one-time close program. We even offer a two-time close as well. But, ladies and gentlemen, I want to make sure. I don't know if I've used this word. I mean, I try to get it in at least one time a week. But please be aware of the oh-so-dangerous smuckatelli out there. Because this week, not one, but two different clients, potential clients. I'm not going to get ahead of myself and put the cart before the horse. But contacted me. Was advised about our one-time close, and said, well, I'm already working with Smuckatelli Bank over here, or Smuckatelli Lending. And, ladies and gentlemen, if they tell you your initial rate is X, okay, that's not a one-time close. So please be careful of that. Because while rates right now are solid, we don't know. I do everything in my power every single day. My whole goal is to figure out, how do I bring the Gumbo Nation a crystal ball? How do we know? How can we project? How can we see into the future? We do it every day. But one thing we don't know is, hey, what a rate's going to be in 6 months. The Fed could sit there and go, hey, we're going to keep them low. Well, is 3.875 is low. But that's not the 2.98 where we're at today. So my point is, please be aware. Please educate yourself. Check out, follow some things, whether you use me or not. But so many of these people who are not certified mortgage advisors, so many of the people who are not licensed lenders, so many of these people who are not in a position to be able to educate you on what your options are outside of what their little office offers. And that's not fair to you. So do like these two clients this week and said, hey, here's what I'm being told. Is this correct, or is this something that I should do, or can I do? And, man, that initial rate was awesome. The problem is, guess what? They're not getting that initial rate. Oh, your initial rate's 2.875. However, you're going to pay this during the construction process, which, guess what? Part of our one-time close, you don't pay anything during the construction process, okay? You have that choice on certain programs that we've got. Hey, if you're a veteran, you don't even have to put money down. But you have to make sure that you are aware of what your different options are, because they're not locking you in at 2.875. That's what the rate would be if you were completing your house today, which would be solid. But I can't tell you how many people come to me that I refinance them out of their construction loan because their so-called one-time close, now the bank said, hey, we can't do it. The house didn't appraise for what you said, or here's where we're at. So your rate's 5.5%, 6%. Or we're going to keep it at the, we got to put 2 points on top of what we gave it to you during a construction period of 4.5%, so it's 6.5%. Just be aware, ladies and gentlemen. Just be aware. American workers may begin receiving monthly Social Security retirement benefits as early as 62. It's a key number for today's show, albeit at a reduced level. And many of y'all know this if you've listened to the Hall of Fame financial advisor Gregory Ricks. So if they take it at 62, it's at a reduced level for what is available at one's full retirement age. Just under 50% of American blue-collar workers take their retirement benefit at 62, while only 38% of white-collar workers begin their retirement benefits early. So the point of me bringing this up is that's why we're going to talk today about reverse mortgages. I know, start getting those myths in your head. Start getting them. Wow, the bank takes my home. Well, I can't pay off what I want to pay off. They control my funds. Start getting all those myths ready. Because like I said, I've got the pioneer of reverse mortgages joining. She helped put this program together back when it started. She was one of the lenders that they reached out to in the entire world. And she's here today with you, Gumbo Nation. But my point is, that's where reverse mortgage should come in. We've got some great stats for you that we're going to cover. 10,000 of you. 10,000 of you are turning 65 every day. It's easier to qualify. Seniors. And how do you know you're a senior? You go get the free cup of coffee, or you go get the 10-cent coffee, or you use that AARP card. You know who you are. Y'all are sitting on over $7 trillion in equity. So if you're struggling, parents, kids, for your parents, aunts, uncles, brothers, sisters, if that family member's struggling, maybe there's a way out. Maybe a reverse mortgage is something you got to consider. This isn't your program from back in the 90s. It's a lot different now, and it's set up for you. Hey, let's knock out our weekly segment we like to call Rate Watch. Rate Watch is brought to you by Tito's Handmade Vodka. It's America's first handcrafted vodka, and it's delicious. You know that. 30-year, 2.94. 15-year, 2.44. FHA, 2.40. Jumbo, 2.30. I'm sorry, 3.30. That's a 3. My bad. VA continues to be in the mid-2s. So from a rate standpoint, hey, they're trending up a little bit over the last couple weeks or over last week. We talked about last week with the world strife. Well, things are settling down. The sediment is settling, but it doesn't mean it's still not out there. So keep an eye on that. Don't miss out. And remember, adverse market fee. It's in effect in less than 2 weeks. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. If you want to join the show, 504-260-0995. Vice President of Heckham Lending with the mothership, Susan Pomfret, joins us next.
Hey, you said Heckham Lending?
Yeah.
Okay.
HECM. Stands for Home Equity Conversion Mortgage.
Oh, HEKEM?
HECM.
HECM.
Yep.
All right, 2.5 minutes.
Oh, boy. She's dialed in. We're good.
Yes, sir.
Perfect.
All right, 30 seconds.
All right, brother. I see you out there, Twitch, LinkedIn, hanging out. Good stuff. Periscope. Welcome. Oh, there she is. Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. Hey, if you want to join the show, 504-260-0995 or shoot us an email to info@mortgagegumbo.com. Hey, this segment's brought to you by The Fence King. Visit FenceThisYard.com. 20 years of experience 170 plus 5-star Facebook and Google reviews. With his one-of-a-kind virtual fence designer, you're in control. No high-pressure sales. Now offering tropical storm and hurricane post. Doesn't get any better than that. And as always, the Fence King's work comes with a warranty. Visit fencethisyard.com. Hey, also special shout-out to my mom and dad who've done it right. 50-year anniversary they're celebrating today. So happy 50 years. That is absolutely fantastic. So, Raj and Bob, good job there. I'm better at loans than love, and that's lucky for y'all. And also lucky for you, Gumbo Nation, joining us is Susan Pomfret from the mothership, the Vice President of Heckham Lending. Susan, how are you doing? And thank you for joining the show today.
Good morning, Dwayne. Thanks for having me. I'm so excited to be here. I'm doing well, thank you. I hope you are too.
I appreciate that. So y'all could probably tell from Susan's vernacular, her voice, and when you hear, she's got a little Yankee in her, right? A little accent there. So how's the weather up there for you in Rhode Island? How many of y'all know somebody from Rhode Island? Yeah, well, I do. And she happens to be like the greatest Heckham reverse mortgage person in the history of the world. So how's the weather up there by you?
Very cold.
Oh,
Very
yeah?
cold.
Here, too. It's getting up to like 68 today. So,
oh, nice.
but it started at like 55, Susan. So what that means, just so you know, down here in the South, that means everybody, once it gets below 60, people bust out the hip boot, the boots that come all the way to ladies up above the knee. The rabbit coats, the furs, the scarves. It's funny. And then by the middle of the day, it's 80 degrees. So kind of crazy. So listen, thank you so much. And I want to make, the audience just aware. Kind of tell us how long you've been doing it and give us a little bit of your history of Heckham and reverse mortgages.
Sure, I'd love to. So I actually was part of the FHA pilot program back in 1989 when HUD picked 50 companies throughout the U.S. The company that I work for was one of the ones that was picked. So I started working on them in 89. As you know, my parents made me go to work at 5 years old.
Right.
And actually, Heckham's have been around since 89. Reverse mortgages have been around since 1961. And the Heckham's became a permanent product for FHA back in 1998. So they've been around a while.
So, and that's a good point. So do me a favor real quick, because Heckham and reverse, kind of in a brief synopsis, kind of tell us the difference between what a Heckham is and what a reverse mortgage is.
Sure. So a Heckham is a home equity conversion mortgage. It's insured by FHA, and it's available to homeowners 62 and older. A reverse mortgage is available to those 60 and older, and it's typically your jumbo, your high-valued properties. Both of them allow the borrowers to touch a portion of the equity in their primary residence, and then we're going to talk about different payment plan options and kind of the benefits of how it works.
Yep. No, awesome. And I think that's important for folks to know because, a Heckham and a reverse, there is a little bit more. Now, in our market here, we're not up north like you guys or out west or, where we have a ton of the jumbo products and the jumbo loans. However, there's some options there. So give my audience an idea of, especially you being one of the 50 people that rolled out this program, why was it established? I mean, what was the purpose, or what is the purpose of the reverse mortgage, the Heckham loan?
Primarily, it was to keep retirees, seniors in their home. Typically they're on fixed income, just Social Security in most cases, and it gets costly, right? Inflation, and they don't really get that inflation increase in their Social Security. So it just was giving them the benefit to tap into some of the equity in their property so that they can afford to stay there. And pretty much that's what it's been doing. And it's really come a long way. It's not the loan of last resort by any means today.
Right.
But it just gives them the extra income to be able to afford retirement.
Yeah, and I think as you go over later when we talk about the payment plan options, I mean, hey, you can use it to, supplement income if you lose that loved one, if you want to just have that line of credit there for you, just as that rainy day fund, just so many different options, that's for sure. So, myths. Let's sort of start with just what are some different myths that I get, and you may even be able to throw out a bunch of them, because I'm amazed at, on a daily basis, how many of these that I get, right? And it's just crazy. And the biggest one that I get, and you I'm sure being the industry guru that you are, you could probably add a few others, but, the most common one is the bank takes my home. Can you kind of debunk that myth for us?
Sure. I mean, yeah, I've pretty much heard them all since
Yeah.
1989, and the bank's not going to take your home. Obviously, even though you're not making a monthly mortgage payment, you're still responsible for property taxes, homeowners insurance, if you have HOA dues, any other property charges, and obviously upkeep of the property, just like a regular mortgage.
Right.
So if you continue to pay your property charges, you're fine. The bank's not going to take your home on you. It's a mortgage lien against the property, just like a regular mortgage.
So where did that myth arise from? I mean, was it because of how they used to hand out the money and maybe people got into negative equity situations, Susan? I mean, how did that myth even get legs and grow and become, it was a snowball, and then it turned into this just gigantic, avalanche, so to speak? How did that myth even come about?
So that's a great question. I think there's two reasons that came about. One, people weren't paying their taxes. And as with a forward mortgage, a regular mortgage, if you're not paying your taxes, the lender, the bank, is going to take you home, right? You have to pay your taxes. The second part of that is well before the more secure FHA product came along, there was a lot of products prior to 89 that were equity share products, whereas you were actually sharing some of that equity with your lender.
Okay.
So as you know, you're not making a mortgage payment, so your balance is going up, and if you pass away or sell the home when your value's down, then yeah, sure, the bank's probably going to take your home because they have that equity share feature. We don't have those today, so that's a good thing. And we make it very clear to people the responsibility of making sure that they pay their property taxes so they don't get into that situation.
So
and actually having the extra money from the HECM or the reverse mortgage helps allow them to be able to afford their taxes, right?
No, absolutely. And I think that's what one of the things, it's that peace of mind really is, when I sit down with individuals and is letting them know the peace of mind. So that is a great point. So it used to be, so listeners, understand, when you're hearing these myths about people taking your home, these are things that were back in the late 80s and the 90s, and it was equity sharing. That stuff's illegal now. It doesn't go on anymore. Those were more, I would assume, proprietary products, or we just didn't know any better, right? FHA wasn't in place to secure these loans and insure them, right, Susan?
Right.
That's good stuff there. All right, so here's another one. I can't use the money that I want to, right? So let me read this question here, because this just came across here. How can I use the money to be able to pay off loans? That's what I want to use the reverse mortgage for. Am I able to use it? I can't use it the way I want. It's kind of written strangely there, or I just can't read too much coffee.
It.
But you know what I'm going at.
I gotcha. So the borrower is not restricted on how they use the proceeds. It's their equity. They can do whatever they want with it. Pay off debt, delay Social Security, pay for medical expenses, remodel or home modifications. I mean, it's their money. They can do whatever they want with it.
And I guess what I want to add to that is, listeners, when you do a reverse mortgage, we pay off the mortgage. It's not a a traditional mortgage where we're going to list out your debts on it, and it's not considered a consolidation, right, Susan? It's a HECM loan. So when we say that, you get to control your funds, and you hear people saying you can't do what you want, absolutely, you're going to get a lump sum That's the biggest thing there. So for people that have said that to me in the past, when I've dug into it a little bit more, what I've noticed is maybe they don't qualify, right? So on the other side of the break, that's what I want to get into with you, Susan, because I just got a question that came over is, can you advise outside of the age range who qualifies? How do you qualify for a reverse mortgage? Joining us from the mothership, Susan Pomfret. Started doing reverse mortgages at like the age of 2, and she's been doing it for 30 years now. So y'all could figure out what her age is. So any questions you got, shoot them over to info@mortgagegumbo.com. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
All right, 2 minutes. 2 minutes. $30.
Yep. We're back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. This segment's brought to you by Bienvenue Plumbing and Repairs. Visit bienvenuplumbing.com. That's bienvenuplumbing.com. 20 years, Mark has built his business based on three simple things: reliability, professionalism, and affordability. You can trust Mark and his licensed and insured business. I said licensed and insured. He's the best out there. Visit bienvenuplumbing.com. All right, Susan, you back with us? We still got you? You're not frozen up there in Rhode Island?
Not yet.
All right,
I'm
good.
still here, thanks.
Good deal, good deal. So joining us, or if you're just joining us here in this segment, we have Susan Pomfret, Vice President of Heckham Lending from the Mothership. Susan has been basically one of the pioneers when it comes to reverse mortgages. So she was debunking some myths. You mentioned as far as qualifying goes, hey, 62 years old, all that kind of stuff. But I think, one of the things I like to explain to my clients when I sit down with them, the difference with a reverse mortgage as well is traditional mortgages, Susan, we qualify them based on debt-to-income ratio, right?
Correct.
Whereas when it comes to a reverse mortgage and we're qualifying them, it's more of a disposable income, right? So it's what do you have left over? And I think that's something when people have to kind of understand that, we have to give you so much money and leave you with so much money every month for you to be able to qualify. Is there any other maybe like tips or anything outside of really that you could add?
Sure. So, as I mentioned earlier, with the Heckhams, the borrower has to be at least 62. With the reverse mortgage, it's 60 years old or older.
Yep.
It has to be on their primary residence. And like you said, we don't do FICO scores or debt-to-income ratios like the forward world does, but we do what's called financial assessment and residual income.
Right.
And HUD came out with that back in October of 2016, and that's exactly what you said. That's when we look at what's left over. After all your property charges, what do you have left over? And to ensure that you're able to afford to stay in your home. And we also can use the Heckham proceeds to help qualify you. So that's a nice feature too. And typically, with all Heckhams and reverse mortgages, but with Heckhams specifically, there is HUD required counseling by a third-party counseling agency that is approved by HUD. So I think that's really important because it also not only ensures that the borrower understands what we're telling them, but it also will see if there's any other programs or any other services that are available to them in their area, which I think is a great thing. And we see a lot of times the borrowers, when they talk to the counseling agencies, they find out maybe there's, in New England, there's a heating assistance program, so they qualify for that. So it's really a great safeguard that's in place, but it also gives more resources to that borrower.
So you mentioned, and I think that's 100% correct. And, I joke around with my listeners all the time is, I treat things a little bit differently when it comes to the Heckhams that we do here, the reverses, because, you see Magnum PI and the Fonz on the phone, right? Our Heckham followers know that. My younger employees who are under 40 are like, who's the Fonz? Who's Magnum PI, right? But the biggest thing I want folks to understand is when I do them personally, you're going to meet with me first before the counseling, because I want the counseling to be something to where it just kind of reiterates that you're working with the right person and that you're working with somebody that's giving you all the facts and that you're just kind of going, you know what? Okay, he's got that there. So that's important. There's a couple terms because you've mentioned the word safeguards. And again, this whole program, there's so much just misinformation out there. And, I call it the drunken uncle syndrome. Everybody has one at Thanksgiving who the drunken uncle who gets loaded and he knows everything about everything, right? Yet he does nothing. He's the guy that's had 18 jobs. He's done all these different things. So you keep mentioning the word safeguard. So I want to kind of give you a couple terms here so you could share with the audience and sort of put them at ease. So can you explain what non-recourse means as a safeguard? What does a non-recourse mean?
Sure, and it's a very important feature. So non-recourse means that you nor your estate are ever personally responsible for the debt. Only the home is. So that's huge. Back in '08, we saw home values crash.
Yep.
So imagine those that either were selling or maybe passed away and the home value went down. Well, that family didn't have to worry about it. They were not personally responsible for the debt. So that's a huge insurance feature that HUD has on the HECM program. Now, I will say the reverse mortgage product also has that same feature. So, years ago, there weren't as many safeguards as there are today. And every year, more and more safeguards get put into place. So it's become a really safe program over the years, for sure.
Yeah, there's no doubt. And I love to I try to get the children, family members in at the meetings as well, Susan, because that is one of the things that I discuss with them is the non-recourse. This doesn't come back on you. And so let's talk about a couple of the other things and I know we're going to talk about reverse purchases and the benefits of that, but what about a non-borrowing spouse, okay? Can you explain what that means in this reverse world?
Yeah, another safeguard. Great question. So non-borrowing spouses is typically someone that's under 62.
Okay.
And you can still move forward with a non-borrowing spouse. Say you have a borrower that's, 65 and a non-borrowing spouse that's 60. You still move forward on the HECM. The nice feature, though, is when the borrower, say that 65-year-old, passes away, there are safeguards in place for that non-borrowing spouse. They can stay in that property. They're not going to get kicked out as long as they pay the taxes and insurance, just like we talked about earlier. But they're protected. They're able to stay in that house. They won't get any more HECM proceeds because the borrower passed, but at least they are protected to stay in that house for as long as they wish. So very important.
I think that is such an awesome thing and such a great feature because the non-borrowing spouse, that is the key. Now, so if you got a guy who's 80 years old and he's working with the 58-year-old young lady or vice versa, and he passes away. And if those monies were not used, Susan, just to confirm, whoever's left, they still have the benefit of using that house as long as they pay for tax and insurance. They don't have to go through, because this is something I've heard, and I want you to confirm. Does that non-borrowing spouse have to go through a requalifying process?
Nope, they stay in the house.
Exactly.
They're eligible. They're on title. They stay in the house for as long as they choose, as long as, like you said, they pay their taxes and insurance.
Absolutely correct, which is fantastic, and that's why I wanted them to hear it from you. Because so that non-borrowing spouse, listen, if you had $100,000 left in that line of credit, they don't get that. Correct? Just to confirm.
Right.
But
correct.
More importantly, they're guaranteed. You lost a loved one. You're guaranteed the roof over your head. Chances are, y'all have worked out what the plan is. You have an estate plan. You have a will. You have something, which I always recommend. Speak to someone about what is your plan with this house down the road, right? All right, a couple other terms. Let's get into what type of payment plan options there are for reverse mortgages, Susan.
Great question. So with the HECM program, they can either receive a monthly payment, a line of credit, a lump sum, or a combination of those. So based on what they're trying to accomplish, what their goals are, we can actually, get them in a financial place that is comfortable for them and give them what they need. But the best part about the payment plan options is, regardless of how they choose to receive the HECM proceeds at closing, they can change their payment plan at any time as often as they need to through the time that they have the HECM. The servicer will charge a $20 setup fee, but as their life changes, like you said earlier, you have two, husband and wife, and one of the spouses passes away. So maybe now they need to change it to a monthly payment to supplement that loss of Social Security income. So as they age, anything that they're faced with, they're able to change that payment plan to make it work for them, which I think is unbelievable.
Thank you so much. And it's so important. And we're going to digitize. I'm probably going to make a poster out of that, Susan, if and do some kind of, audio piece with that, because the fact that you said you can change it. I mean, this program is it's almost a moving target. You're not restricted. So when those myths are, I'm not in control, if I live long enough, the bank takes my home. No, you're in control. You can change. That loved one passes away. You're going to miss that person. There's no doubt about it. And maybe you lose that income. So now you want to look at, hey, you know what? Instead of having $100,000 sitting in a line of credit, we now lost that income. Hey, maybe let's see if we keep 50 in the line of credit. Maybe I pick up a few bucks, right, every month to kind of help with some expenses around the house. And I think that is absolutely, absolutely amazing. And then I've got one more here before we head to the break, okay? So in about 30 seconds, Susan, tell my listeners why, if you choose the line of credit option, why do they give you so much at closing and then make you wait 1 year?
Great question. So with HUD's changes and safeguards every year, what they did was they allow a borrower a certain percentage the first year, and then the rest is available after that first year. And it's primarily to ensure that they have additional monies available because, as you mentioned with the line of credit, there's a growth feature.
Yep.
So whatever is left in that line of credit, it will grow. It's not free, right?
That's
you,
right.
You spend it, you owe it back, but it has a growth feature. So that gives more money available to you, which we show you annually on an amortization schedule, but you'll see monthly on your monthly statement. So with having that and sitting there in that line of credit with that year, you'll probably get, quite a few $1,000s more available to you.
Yeah, it's absolutely amazing. And when I sit down with people on that amortization and show them how we give them this amortization and show them, I mean, that's where it's the crystal ball, right? You can now see what your money's doing for you down the road, which is just absolutely fantastic. Ladies and gentlemen, we got Susan, Gumbo Nation, Susan Pomfret from the mothership joining us. She's the vice president of Heckham Lending Division. She is fantastic. We're getting you all this great information. On the other side of the break, we're going to talk about, hey, what if you want to sell it to a family member? What kind of deal do they get? And reverse purchases. We mentioned earlier, seniors, y'all sitting on over $7 trillion. How about sell a house and move into something cooler or newer or closer to that family member? You listen to Mortgage Gumbo with Dwayne Stein on iHeartRadio, 504-260-0995. Hey, Dave,
Yes, sir.
if you want, like, to bump them, if we're using Mortgage Gumbo,
Mm.
just kind of pick it up at different spots maybe.
Oh, yeah, I get what you're saying.
You know what I'm saying? Just, I don't know if you could let it roll throughout the whole show. You know what I mean?
Yeah. Yeah, that's no problem. All right, cool. Yeah, let me start it up now then.
It's confusing me. Like, I want to, because for 6 years I said the intro. You know what I mean? So I'm hearing it, not a habit. I want to be like, your Gulf Coast Mortgage Authority. We're back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. Joining us, Susan Pomfret, Vice President of Heckham Lending. And, wow, she has the inbox absolutely on fire. We're talking all about reverse mortgages, ladies and gentlemen. So, hey, if you've got a question, shoot it to info@mortgagegumbo.com. And this one here comes from Tracy, Susan, and I know we're about to get into this, but heck, why not just start with a question, right? So we're about to talk about reverse purchases, and here's the question they ask. Why would I use a Heckham for a purchase versus getting cash out? That comes from Tracy over on the North Shore. Why would I use a Heckham for a purchase in my golden years, I'll throw that in, versus the cash I got on hand?
That's a great, great question. And the Heckham for Purchase came out in about '08, and it really helps seniors save some of the proceeds maybe from their current home to purchase the new home. So, for instance, let's say they sell their current home and net $200,000, and they're buying a new primary residence for $200,000. For example purposes, let's say they put $100,000 into the transaction, and we give them $100,000 with the Heckham for Purchase. Now, they just saved $100,000, which is left over to put in their pocket and to use throughout retirement. That's huge.
Versus using the cash that you would now maybe would be left to heirs, right? That maybe that cash is something you could roll back into, adding that to the cash that you had for that $200,000 house, Susan. All of a sudden you add that $200,000 to the $100,000 we gave. Well, now you talk about, leaving a legacy down the road, right? I mean, that's because most things I get from people are, well, I want to use this, I want to leave it to my kids, or I want to. That, to me, what my response to that is always, that's what life insurance is for, right? That's what those things are for. Your house, I'm not sure how many children are out there are fired up about getting somebody's 40, 50, 60-year-old house, right? So I always tell people cash is king, and my listeners understand that. So that is a great point. Now, here's what people go, oh, well, you give it to me. What does that mean? How do you give it to me? Can you kind of clear that up for people? I know it's such a simple question, but people want to know, like, hey, where does the money come from? Like, do we go over to Caesar's Palace, put it all on red, or where does that money come from?
The money on the Heckham for Purchase?
Yeah, so in other words, if Dwayne puts up $100,000 and Mortgage Gumbo is going to give the other $100,000, where does Mortgage Gumbo's $100,000 come from?
Okay, so we work with 3 investors right now. So
Gotcha.
they're primarily the ones that are our lenders, I guess you could call it. So they're the ones that will service the file and give you access to the funds on your payment plan options and give you the money for that Heckham for Purchase. And it's not much different than a regular forward mortgage purchase. Exactly.
And that's my point. I want listeners to understand. It's no different than a regular mortgage. The beauty of a Heckham is this. It's your way. The longer you live, you get to get back at the bank. You get to kind of flip them off. You get to wave the 4 fingers under the chin at them. because the longer you live, number one, you've lived a heck of a life, but then that interest just accrues. And I've yet to meet a family member who don't want mom and dad or brother, sister, aunt, and uncle around longer. So reverse purchases. We just talked about what are some of those benefits? We talked about the benefit of them being able just to hold on to the cash, right? I mean, even reverse purchases for new construction. I've done several of those. And you talk about just an awesome program. I mean, you get to build a new home, right? There's low inventory right now. Sell your house, go build a new one. Let's talk about, though, for my realtors and the realtors that listen to the show. How can we use this program to open up options for them?
Wow. So this is we're seeing it, and Dwayne, you see it with your realtor partners. I mean, realtors are really understanding the program and utilizing the program, putting this tool in their pocket. One of the things, as Dwayne mentioned before, 10,000 people turn 65 every day. 34% of all homeowners are over the age of 60. I mean, so the opportunity is there. I mean, our older population is huge. Mm-hmm. And the realtors that you work with them knowing about the Heck'em for Purchase, they truly set themselves apart from the competition because they now have this tool in their pocket working with you who is focused, professional, experienced. No other company can say that. So, they definitely can set themselves apart from the competition, and they'll get referrals. Because if you're saving someone, in the example that I gave, $100,000 to put in their pocket to use it throughout retirement, you don't think they're going to tell their friends, go see, Mrs. Realtor, Mr. Realtor. You just save them that money instead of being a cash deal. They walked away with $100,000 that they can use. So it also allows them to double their purchasing power. If they say they want to use the whole $200,000 and they want to buy a $300,000 home, you know what I'm saying? So They use their $200,000, we give them the rest, and they're in a $300,000 home, whereas maybe they wouldn't qualify for a regular forward mortgage. So it's just options. You got to give options, right?
2 minutes.
It's a great option to give to anyone 62 or older for sure.
Absolutely. I think that's and they get a 2-for-1. Chances are, if they're using you to go get them a new house, probably going to use you to sell their current house too, right? So kind of a 2-for-1 there. Hey, visiting us is Susan Pomfret, Vice President of Heck'em Lending, with us. All right. Give me, in a nutshell, because can you believe this thing's already over? We could do like a 4-hour show on this, so we'll definitely have to have you back.
A minute and a half.
What I want you to understand, and if you could do it in about 30 seconds, Susan, because we're up against the end of the show here. If a borrower wants to sell their property, what is the benefit of somebody buying or them selling that property? What kind of benefits do they get by doing that?
So if a family member wants to purchase it?
Yep, if a family member wants to buy it. Sorry.
Sure. So whether they want to sell it while they're still alive or when they pass away, if a family member wants to purchase that property, they can do so for 95% of its appraised value.
So
they only have to
a tremendous win.
95%.
1 minute.
Mm-hmm.
Yep, that is a tremendous win. Susan, you're a rock star. I'll let you get back to the frigid Rhode Island weather. As I cut grass here, because we still have grass growing. So thank you so much. I know we'll continue to be in touch. Thank you for just being a pioneer, a leader, and a professional in helping out my clients, my industry, and just bringing this fantastic program. Thank you so much, Susan Pomfret. That's for sure. Gumbo Nation, if you want to hear this again, hey, it'll be playing again at the 1 o'clock. But more importantly, go to the Rue newsletter. Sign up for our Rue newsletter. Or go check out our podcast, iTunes, Spotify, or look for that big chef hat in the sky. Woo! That is education right there and providing options. That's what this show does. It's the home show. You've been listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. And until next week, Gumbo Nation, keep stirring the pot.
All right, clear.
You the man, brother. Hey, I'll get with you this week, and we could kind of brainstorm some
okay.
some ideas, brother. You the man, dude.
All right, bro. Have a good week.